Hey, what's going on, guys? My name is Dr. Boyce Watkins, and we have a whole lineup today on drboycetv.com to get you guys ready for the week. I want to make sure that you're investing good and investing smart and that you know where the money is. And the big stressor this week are Trump's tariffs. And we're going to break all this down for you. So get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we believe in Black wealth, Black economics, and Black people breaking generational curses and building our wealth. And I want to say hello to everybody who's in here, Barbara Cole and Artari and Linda Veal and Toby Williams. I see you in there, and decided to bring back that old intro for the Black Financial Channel. You guys can let me know if you like it, if you like the intro thing, or if you want me to just keep it simple. I don't know. Either way, though, this is also on Spotify. So if you want to check this out via audio, just go to Spotify, look up my name, Boyce Watkins, and you'll find a couple of podcasts I have there, the Dr. Boyce Breakdown and Dr. Boyce Daily Stock Market. So right now, the big conversation is Trump and these tariffs. This week has been a really crazy, chaotic week. The week before that was crazy and chaotic. You can say that the stuff coming out of the White House now has just gotten to be downright ghetto. It's just ghetto right now. They just being ghetto, and I want to help you make sense of the nonsense and turn that nonsense into dollars and cents by basically breaking down some of the latest in terms of what's been happening in the markets, things that you probably want to know about, things you want to understand. So I'll start from the top in terms of things that are on my mind. Obviously, the tariffs are the number one driver of all of this, right? And the tariffs have changed. I think that just today, the president just announced that he's going to have some sort of exemption on tariffs against companies that are selling cell phones or something. And I'm going to actually share my screen on this because I really think this is worth taking a look at. This is a new development that really wasn't something that was going on last week. And I'm going to pull this up on the screen. And by the way, if y'all can let me know, give me a quick yes if you can hear me. Let me know if my audio is good and I'm coming through all right. This is according to CNBC. All right, so here it says that Trump has an exemption on phones, computers, and chips in his tariff plan. I'd be shocked if that does not lead to some sort of boost in your stock prices tomorrow. It says here, let's see what it says. I'm trying to get posted up on what's going on here. It says smartphones and computers will be exempted from Trump's reciprocal tariffs. Trump earlier this month imposed a 145% tariff on products from China. I'll make that a little bit bigger. Hopefully you can see it better on the screen. 145% tariffs on products from China, a move that was poised to take a toll on tech companies like Apple, which makes most of its other products in China. The guidance also includes exclusions for other electronic devices and components, including semiconductors, solar panels or solar cells, flat panel TV displays, flash drives, memory cards, solid state drives used for storing data. And so that's good. That's good. That's good. That means somebody in the White House got some sense. Everybody in there ain't crazy and ghetto, and they're not trying to all destroy the economy at the same time all at once. Don't get me wrong; they still might achieve their goal of causing the Great Depression again. But this is a positive development, and I'd be curious to see what Apple stock is looking like on Monday. I think Apple's probably the greatest beneficiary of this. Apple stock right now, it went up actually on Friday. The crazy thing about Friday is I think that Friday started off deep negative, and then it went like super positive, which was just chaotic. It was ridiculous. And one thing about the recession is that there are some people who actually believe that the recession has already started. There are some experts out there who are actually laying out the idea that the recession is not something that might happen. It's something that has happened. It's something that has begun. I believe it might have been Larry Fink from BlackRock who actually said some of that. And BlackRock, in case you don't know, they have more money than God. And literally I'm talking about like $10 trillion in assets under management or something like that. So a company like that can be really beneficial in terms of letting you know, informing you what's happening on the ground. So the big question is whether or not the recession has already started. And I can tell you that I believe that there's some chance that it's already started, that the backward-looking data that gets released on both inflation and unemployment coming out in the next few months is going to reflect the recession that's already happening now. So battening down the hatches and kind of getting ready for that is a big deal. The other big thing too about this stock market, where you have to be extremely careful, is that this stock market, according to most historical estimates, is already overvalued. Even with the steep decline, it's still overvalued. It's not a matter of it like being like, okay, yeah, it's down, so now it's a good deal. It's a good deal compared to what it used to be, but it may not be a good deal right now. And so there's sort of this back and forth between the U.S. and China. What started off as Trump against the world has really become Trump against Xi Jinping, and that at least isolates the conflict to make it a little more regionalized and focused, and we can kind of study that a little bit better as opposed to what we had before, where it was just a gangster's paradise and everybody was fighting the United States at once, and that's kind of a scary thing. So global markets have been reacting to these tariffs. It's been just probably about a $3-4 trillion wipeout in terms of economic value, paper value, all around the world. Consumer sentiment, according to the University of Michigan's Consumer Sentiment Index, it dropped to 50.8, which is the second lowest level since 1952. So that means consumers are the least enthusiastic, the least confident that they've been since the 1950s. And a lot of you got grandparents that weren't born in the 1950s or that were born in the 1950s. So that's a very long time ago. So this is a deep concern. This means that one of the side effects of things like that is you might see the price of gold go up. Gold goes up generally because you basically have times where people look toward what they refer to as safe haven assets. And so gold, given that it's one of those safe haven assets, has really benefited from what's been going on right now. I'm going to try to pull up the price of gold on the screen so you can see that everything doesn't go down just because the economy is bad. There is a lot of correlation in terms of how different assets react to one another. And so gold's been going up. And when I say to buy gold, I'm not here to tell you what to buy. Y'all know I don't give investing advice, but I can say that gold is something that having a little bit of gold in your portfolio is just generally good, just in terms of having good economic health. If you look at the price of gold right here, I'm going to try to expand it on the screen. I hope you guys can see it. Let me know if you can see that on the screen. You can see that Friday gold went up again. The last 5 days, let's see what's gold. Look at that. It's gone up 7% in the last 5 days. It's gone up 10% in the last month, 22% in the last 6 months. Year to date, 21.95%. Last year, 37%. So if you've held gold over a 5-year period, you made about 85% on your money. 85% ain't bad, but there's a lot of stocks out there where you could have even made much more money than that. So let me pull up another stock just so you can kind of get a point of comparison to kind of understand why I'm not a person that says, go out and just fill your whole portfolio up with gold. I don't believe that that's the best approach in terms of investing. So let me show you another screen because I want you to see why I think gold is okay, but I'm not just somebody who just believes in owning a ton of gold. I'm not, Austin Powers. What was that guy who said, I love gold. I love gold. I'm not Goldfinger. So here you've got Apple. If you own Apple during that same 5-year period, you doubled your money. You doubled your money, right? So 195% is better and higher than 95%. Even if you looked at some other stocks, I could probably pull Amazon up. I hope you can see Amazon on the screen. I'm trying to make it as big as possible so y'all can see it. Let's see what happens if you had Amazon for the last 5 years. Well, look at that. I don't know. Amazon didn't perform better than gold. Gold outperformed Amazon in the last 5 years. That's pretty good. That says something, right? But if you look at a company like, say, NVIDIA, we know what gold, when NVIDIA blew gold out the water. NVIDIA, 1,588%. Literally, NVIDIA is trading at 110.93. You could have bought NVIDIA 5 years ago for $6. So I know you're kicking yourself, but just imagine this. Just know that you'll be kicking yourself again in 5 years because there's some $10, $20 stock out there right now. Right now, it's sitting there right now, and it's begging for your attention. It's like, hey, I'm right here. Look, hey, buy me. And you don't see it, and you're looking all around it, and you don't see it, and then it's going to grow and become a $200 stock, and you're going to be like, damn, in 2030, you're going to be like, man, if I had bought this stock in 2025, I would have made so much money. So just know you're always going to be kicking yourself, right? When you're pursuing opportunities, the first step, the first consequence of economic awareness is you start to become aware of opportunities that you missed. In fact, a lot of times, when we teach every morning, we do our money in the morning stuff. A lot of you are in that class. I know that. First thing people do when I start explaining to them how economics works and all the opportunities and how they can make great things happen is they start getting mad that they never learned those things when they were little. Like, anybody go through that where you're like, damn, man, why didn't somebody tell me this when I was 12? Why'd you tell me that when I was 20? Well, remember that you got a child. A lot of you have kids and grandkids that are 12 and 20 and all that, right? So you can tell them and let them benefit from the price that you paid. Your price you paid is the regret you feel because you didn't learn it sooner, but that doesn't mean you can't pass down the benefit from that regret to the next generation, right? So the generational curses don't have to continue unless we choose to do that. Now, with that said, I want to remind everybody, if you like stock options, we have two things going on in the world of stock options. One is COIN, the Certified Options Investors Network, which is for anybody that really wants to understand options from top to bottom. We do cohorts every 3 months. Right now, we're in week 6 of our COIN cohort. It's going very, very well. And we'll have another cohort in about another 6 weeks, actually. So if you want to join us for the next cohort, just go to drboycecoin.com and you can take a look and apply to join, things like that. We also have the income class, a prime passive recurring income machine. That's what prime stands for. And we're going to meet on Monday. And so all the Prime members, basically what we're doing now is something called Fast Cash Action Plan, where I literally lay out step by step. It's something that you can do in your portfolio right now that would literally make you money the following day. It's beautiful. It's something that I do. It's the kind of thing I was like, wow, this is a great way to lay it out. So we have the Moneymaker Grid. And I'm gonna still give you that, but the challenge I had was the Moneymaker Grid. Sometimes it took a while to understand exactly how it was laid out, because I'm a scientist and I lay out numbers and statistics. But actually, the Fast Cash Action Plan, I think you'll like that a lot better because it literally takes you step by step through the process. So feel free to join us for class on Monday. We're meeting Monday night at 8:30. If you're interested in options and you'd like to join us, just text the word options on your phone to the number 87948. So text options to 87948. So let's continue. Okay, so in terms of what else is happening in the markets right now, what else is going on? Well, as you hit the thumbs up button, let me just tell you this. So there are a lot of major retailers and tech companies that are getting hit with stock market declines. There are a lot of people right now, a lot of the experts that I'm hearing from are basically saying that this isn't all that there is. They're saying that you can buy the dip if you want to. I tend to be a dip buyer, but I'm keeping some gunpowder in the holster. Is that the right term? Fresh gunpowder. Yeah, there we go. Yeah, I'm keeping a few bullets in the. I don't even shoot guns. See, that's my friend Maj Toure runs Black Guns Matter. He'd probably be making fun of me now. But anyway, I got some fresh gunpowder on deck because I basically kind of have this feeling that even though buying the dip can allow you to participate and make sure you don't miss the rally, that there are a lot of people who believe that the rally isn't coming just yet, that we haven't hit the bottom just yet. But you got to be really careful when you approach this market as a trader, as opposed to approaching it as an investor, because if you approach it as a trader and you try to time everything, you're going to end up getting it wrong. But right now, literally, there's a lot of belief that this decline isn't over. It could get worse. And the biggest concern they have right now is not just the uncertainty of what's going to happen, but the centrality, if you will, of this idea that one person can wake up, in the morning and decide he wants to disrupt the entire global economy. That's just kind of strange. I've never seen that before. And that opens the door for a lot of corruption. There's probably a lot of corruption happening, a lot of billionaires being made because of their proximity to the president. I do think that Trump, based on me studying and watching him for 35 years, I think he has the capacity to be financially corrupt. I do believe that. It's not enough. But unfortunately, I'm a cynic. I believe that a lot of the politicians are corrupt, including your favorite guy, Obama. I'm from Chicago. I've heard enough stories that concern me. But with that being said, there's varying levels to this stuff. But I think at the end of the day, if you want to know if I think they're manipulating the market, I think they absolutely are. And so maybe if your goal is to put all that to the side for a little bit and focus on where you can find your money, then I would listen to what he says. If he sends a bat signal out to his people, this fits right into finance. There's something in finance called signaling theory. And literally in signaling theory, they say that what you do is, as an investor, a good way to make money is you look at the insiders, the people that have all the inside knowledge, and they send you signals, and they're based on their behavior and their words. So you pay attention. So Trump is sending signals, and believe me, all the experts on Wall Street, They're sitting back and they're just saying, hey, we just want to make the money. And so if Trump comes out and says, hey, go buy stocks, or the market's going to do great next week, watch that the market will start to rally right then, because people are paying attention to that. I'm not telling you how to feel about the politics of it. I know it's complicated, but man, this is strange. I didn't know. I admit I didn't even know the president had that much power. I didn't know the president could just be like, I'm putting, you get a tariff, you get a tariff, you get a tariff. I didn't know. I thought that there was a procedure. I thought they had to get approval. Like, I thought Congress had to say okay to it. I didn't know he could do all that unilaterally. I think that's kind of a lot. And if he does it wrong, it's gonna cause long-term damage to economic relationships around the world, and it's not very healthy. So anyway, we'll keep going with that in a second. So let me give you some more things that are happening right now with this market. I see one of you mentioned that you want this shirt that I'm wearing. Well, we are gonna make some apparel with the Panther on it. We're working on it right now. Actually, we're trying to find places to get it printed at a cost that was fair enough that we could actually make a profit in the business and stuff like that. So that's the hard part. And then just supply chains. It's a real challenge. Like, even right now, I could show you where we have like literally thousands of these books stacked up like in my basement. And because you guys are, and I appreciate your support. I'm signing all these books, and there's like workbooks and flashcards and all kinds of stuff. So selling stuff and shipping stuff is a whole vibe in itself, and a whole operation. So we are working on that. So thank you for asking that question. All right. So with that being said, let me give you a few more things that are happening in the market, and I'll kind of give you some thoughts and tips in terms of some places you could put money. One thing that's really been discussed a lot lately is the bond market. The bond market actually is what many believe was the catalyst that caused Trump to fold his cards a little bit and do the 90-day pause on the tariffs. And this was big. What they watch is they watch like the 10-year yield and the 30-year yield, and they look at the yield curve to see if it's inverting and just how high those short-term rates are getting, things like that. And so what basically happened was that these bond yields got kind of crazy, and nobody knows exactly why it happened, but they know that if the U.S. is taking on a bunch of debt, then one of the vulnerabilities is that they need people that are willing to own this debt and buy this debt. If those people don't buy that debt, if they're not willing to hold those bonds, then we're in trouble. We end up having to pay higher yields in order to sell the bonds, which increases the amount of money the government has to pay in order to service the debt. So one of the U.S.'s vulnerabilities, and you should learn from this actually, is that, look, here's the deal. The Chinese are good savers. They save better than the United States. In fact, every country damn near out there saves better than the U.S. Americans don't save because saving is not part of your culture. And I talk to you guys a lot in my book, The 10 Commandments of Black Economic Power, that economics is culture. Culture is economics. So because we don't have a saving culture in America, we have a debtor's culture. We have a consumer culture and a debtor's culture. So we buy a lot of things from around the world. We're not as eager all the time to sell things. And then also we end up borrowing to a point where other countries have to step in and buy our bonds, which to keep our rates low. If they don't buy those bonds and those bond prices fall, then the yields go up. When the yields go up, that means you're having stress in the bond market. The bond market was the catalyst that caused Trump to actually fold, because that is the sign that your economy is starting to crack. It starts to crack when you're not just losing productivity and you're having employment issues and inflation. Those are all problems as well. It also starts to crack when you lose something that we've talked about a lot in class, which is liquidity. Liquidity matters. The ability to convert things into cash matters. You know what liquidity, liquidity very well. Liquidity is when you need cash and you ain't got it. You got something of value, but you don't have cash. Maybe if you don't have a job, but your bills are coming up, but you got a master's degree, well, that's a liquidity problem. You need to convert your human capital, your time and your energy and your skill into cash, and you got to do it fast in order for you to be able to pay the light bill or to pay the rent or to pay the car note. So what do? You go around and you make deals with people. You give them higher yields. You say, hey, look, normally I would charge you $500 to do this job, but I'll do it for $250 if you can pay me by Tuesday. So what you're basically doing is you're doing what happens in the bond market when there's not a buyer in the bond market. In the bond market, when there aren't people available to provide liquidity, You offer higher yields until they make a deal, until you make a deal. So what was going on in the bond market is they saw those yields creeping up and creeping up and creeping up and creeping up and moving like crazy, being very volatile. And somebody said, "Hey, Mr. President, if you don't fix this soon, we could have an economic crisis on our hands, and a very fast one." And so that's what led him to do the 90-day pause, at least according to the Wall Street Journal. That's what the Wall Street Journal said. So I'll keep investigating this, and I'll kind of let you know what's going on with that. So ultimately, these are some of the things that are happening right now. I personally think that this tariff thing is going to be more complex than they anticipate. Negotiating a trade deal with even one country takes a long time. I have no idea how they're going to do this with dozens of countries. I mean, it's kind of insane to even begin to imagine how much work is going to be required to do this. And that doesn't count all the other crazy things that will be happening in the world of American politics in the near future. So this is going to be good to watch if you like drama. I encourage you to stay consistent with your investing. I also encourage you on the sunny days to consider protecting your portfolio. That's why we buy our put options. The put options are your protection. The put options were the only thing that was my saving grace when the market collapsed the other day. I had a lot of put options in place, and the put options went up when the market went down. So even though I lost money when everyone else lost money, I didn't lose as much because I had the puts. So don't be greedy, be careful, and don't think you're smarter than the whole stock market. It just be consistent, pick your strategy, stay with it, and it'll work. So anyway, I look forward to seeing you guys in class on Monday. If you'd like to do stock options, it's going to be really good. Also, Dr. Alicia is doing her mental health stuff. She runs our Black Financial Therapy department. We're the only institution that has one of those, and we have real PhDs and experts, and it's not bootleg, it's real stuff. And so if you want to participate in any of that stuff, just stay in the loop, stay with us. And then last but not least, don't forget we have the Black Wealth Ambassadors program. So if you want to start a business and the same things that I offer you, like my books and stuff like that, we will sell them to you at a super steep discount. And then you can offer them to other people that are interested in Black economics, that are interested in building the Black community. And you can charge whatever price you want. And then that way we're in business together. The best way to build economies is to do business together as Black people. And so my goal, my offer to all of you, anybody who's interested, is to join us. So if you're interested in that, just text the word wealth to the number 87948, and I'll send you some links where you can get some stuff at a steep discount. So just text wealth to 87948. All right, guys. Well, have a wonderful day. God bless you. Thank you guys for listening. I'll tune in with you a little bit later. And a lot of you I know are in the morning class. So we'll meet tomorrow morning at 10 a.m. I'll see you guys then as well. So have a good night, everybody. God bless you. Thank you so much for listening. I'll see you soon. Take care. Peace.